Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's market price action. It's a Tuesday, January the 30th, and most importantly, talk about the upcoming 24 hours as we have the FOMC ahead. So let's get into it. In this class, again, we'll be reviewing what's going on in the markets, taking a look at the headlines, taking a look at the currency basket, see where the relative strength and weaknesses, and then talk about some possible setups ahead. So now let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis here, let's just jump right in and get into the news of the day. So what are we seeing markets? Markets are holding steady ahead of the FOMC, which we anticipated as we discussed in the currency recap, currency room over the weekend. This is going to be market moving starting tomorrow. What we are seeing in the dollar and the bond yields, they're holding steady. Again, everything is sort of holding steady till tomorrow. So that's really where we are. Nothing new to report. As you can see in the market performance today, when you look at this price action where the best move was 0.16 to 0.18, this is not a tradable day. Remember, we need anything close to 0.5% to really make it worthwhile for to jump into trades. So this is why we say trade your plan. And our plan was never to trade on a Monday, or never. Our plan was really traded on Tuesday, but our plan is to start getting active starting tomorrow. So what we're seeing in the outside of the currency market, the S&P flat, the World Stock Index down slightly. Crypto had a small little pop over here. Gold is not doing much, and the oil is still stronger. So we are seeing the equity markets not doing much. We are seeing the currency markets not doing much, and we are seeing the bond markets not doing much. So everything's sort of lining up all together. In the cryptocurrency market, the Bitcoin and Ethereum outperforming, but not much in the Bitcoin Cash and the Litecoin. So that's really where we are. Let's talk about our outlook. Did anything change? If you take a look at the chart, well, nothing really has changed. We're sitting at closer to the highs, pulling back slightly, but you can see it's a tiny little pullback in a grand scheme of things. We are above the 20, above the 50, things are sloping. So that brings us to a +3 market. So what we're going to find tomorrow is we'll probably see a continuation of this. And if the Fed is a little bit more hawkish and see how the market reacts to it, maybe we'll see a pullback. But right now, it just could go either way. That's just the nature of all these news events. Lately, the biggest and the best moves have come off this Fed event. So let's see what we get tomorrow. One thing to highlight is that the consumer confidence and the job openings today were stronger. So data is still coming stronger. Remember, the last 3 weeks, data has been strong. Is that reflecting in the USD right now or the bond yields? No. Why? It's because we have to wait for what the Fed's going to say. Do they stay dovish or do they stay turning a little hawkish? Remember, in the last meeting, they talked a lot dovish. And all the members that came out and said, we'll be expecting more rate cuts in 2024. And it seems like it's a little preemptive. I think this is a little early to make that bold call. And maybe this is where, after all the strong data, the Fed's going to be like, bit on the hold. So we'll see what happens tomorrow. Australian CPI, they're expecting tonight 0.8 versus 1.2. Again, I'm not really seeing a whole lot of move these CPI numbers unless they come out hotter than expected. They had the China's manufacturing PMI number, but I'm just not going to be doing much overnight. I think the big focus is going to go tomorrow during the day. This is what you want to save the ammo for. You want to save your pips for this. I think this is where we get a bigger risk to reward ratio on some of the movements in the markets, and then you can see that leads into Thursday and that leads into Friday. So looking to be active starting tomorrow. We'll see what happens. We'll be meeting live for this FOMC statement at 2 p.m. Eastern Standard Time. So we'll be covering that live and see if we can catch an opportunity off of it. But lately, again, we get the statement. The big movement comes off of this press conference. Again, that happens at 2:30. So tricky day tomorrow, but definitely expecting more movements. Now let's get into currency analysis and take a look at where the velocity scores are. You can see that majority of things are right in the middle. That's not what we want. We want things trending, +2 or -2. That's where the big moves happen. But that's not really what's happening. So what do you do in this market environment? You pretty much play day by day, and then you go into the following day looking at where the setups are and where can I find most opportunities. Not much to extrapolate from today, so we continue to looking at our trend score and look at some possible trades ahead. So let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with the US dollar, because that is going to be the highlight for tomorrow. USD, even though 4-hour chart, you can see not really going anywhere. Let me take you to the daily chart, because it kind of becomes a little clear here. It is making a little high base pattern. We are right at the cusp of this exponential 13-day moving average, meaning that it's right now sitting at the support and right at the little parabolics are here. So at this point, I think, Mark, the dollar is going to go either way. It's either it's going to break out or it's going to just break lower and test the lows. And I think this is where you really get to decide what's your opinion are or what do your market research say. But I think that's really where we are. But as of now, in this current moment, dollar is sideways. So we really have to pick a side for tomorrow. Now, Japanese yen, even though it's going sideways, the direction is lower. So I still like yen to the downside, and especially if the dollar is strong tomorrow, then I think the yen likely to be weaker. You can see that outside of that, Swiss franc has gone sideways. Euro is sideways, trading in a range. The pound is sort of pulling back a little bit, and CAD is the only one that actually looks the strongest here. Interestingly, it's right sitting at the resistance, so it hasn't really broken out yet. So one thing to note is that it's not broken out yet, but it does look bullish. Australian dollar, you can see that the last few days of range is pretty sideways. Same thing with the Kiwi. What's happening in the last few days? Sideways. So you got to realize the market theme here. We get directional move, then you get sideways move. You get a directional move, and then you get a sideways move. So we are in a sideways move right now. What we are looking for is a directional move, and probably tomorrow and Thursday and Friday we get that direction that we're really looking for. So looking for breakouts out of these consolidation phases. Next 24 hours, let's talk about possible case scenario. What looks the best? What looks the worst? If you take a look at the daily chart on the euro dollar, it's below the moving average, below the parabolics are. So a lot of the dollar setups on the daily looks weaker, but on a 4-hour, it's having a little bit of rally. So if we're looking for some breakouts, take a look at the levels on the daily chart or even a 4-hour chart. Draw the lines there, and then whichever way it goes and breaks further, we want to be active on that one. So that's really where we are. If you take a look at dollar CAD, this is the only one I would say that looks interesting on a short side because it's fallen below the support. The CAD is doing better than the USD right now. But again, if the dollar stays strong or dollar weakens, I think we'll probably see that correlation, a tight correlation between the dollar and the CAD. But if they deviate, then dollar CAD looks like a decent short here. But realize that there's a lot of support in this area. So pound dollar is staying sideways. So let's just say if the dollar stays weak, I think the pound dollar would probably be a better short here. But at this point, I can't really say where it's going to go. So what we need to look for is a breakout one way or the other. Taking with the Aussie USD, you can see it's going sideways. And that's why sideways move here and a sideways move here. We're looking for a breakout or a breakdown, and we'll probably get that tomorrow. And same thing with the Kiwi dollar is going sideways. So I got a lot of setups, as you can see, but they're not ready to be triggered yet either way. So what we're going to look for We're going to look for an initial move and then going to follow that direction. A lot of the things have gone sideways. We don't want to trade a dull market. Remember, we always say trade the markets that is moving. Don't trade the markets that you want to trade. And right now, consolidation. A lot of consolidation. Take a look at the Aussie to USD chart. Just going back to January 19 now to the end of the month, this thing has gone back and forth between 66.20 down to 65.60. That's a mere 60 pip range. Not a whole lot. So what you can do right now is just look at where the relative strength of weakness is. If you take a look at Aussie against the Kiwi, okay, what's strong, what's better, what's worse? Right now, it looks like Aussie is more weaker than the Kiwi. So if it does break lower, that probably would tell you that Kiwi is strengthening against the Aussie. Outside of that, what are we looking at? We can take a look at Euro against the pound. Well, Euro is weaker against the pound, so we know that we like pound more to the upside. Now, taking a look at other areas like Euro Swiss franc, I know we've been sort of going back and forth where the strength and weakness is for Euro Swiss franc. You can see that Euro Swiss franc is kind of going sideways right now as well on this chart. On the daily chart, it's in a downtrend. So not a whole lot, though not a whole lot to extrapolate from that. So what we're looking for is a breakout, one with the other. Look at the dollar. Look at the other areas that you think there could be a potential breakout. But right now, as you can see, the yen kind of looking nicely to the downside here. So if it does break lower, I won't be surprised to go and test this area. So in conclusion, FOMC meeting on Wednesday, which is tomorrow. We're going to be active tomorrow for this report, meeting live. And we'll be again meeting live on Friday as well for the US jobs report. So a lot going on this week. So stay tuned, stay focused, stick with your plan. Most importantly, if you think you already made enough trades so far this week, then that's where you know you shouldn't have been trading. Always keep the powder dry. Have no more than 3 to 5 trades, especially in a current market environment. Their opportunities are scarce. So this is where you want to save your pips. Thanks for joining. We'll see you guys tomorrow. Till then, happy trading. Cheers.